Hello, today I'm going to be sharing how to pay your mortgage off fast. Now, the very first thing that's important is to understand why paying off your mortgage off is very critical to securing your financial freedom. Now, the bulk of your payment each month will most likely come from your mortgage. So if you are able to clear that debt away as fast as you can, it gives you leeway to do more, go faster, invest in other things that can begin to build wealth for you. So today I'm going to be showing you an example using the Money Saving Experts website to show you how critical paying off your mortgage can be for you, how much it's going to save you, and why it is important to start to do it from day one. So let me share my screen just now. So this is the Money Saving Experts website. Now, assuming your mortgage is about 450,000 and your mortgage term is 28 years, as an example, your mortgage is repayment. Typically, home mortgages are repayment mortgages whereby you're able to repay for your home, make the repayments and clear your debts, and then you own the house completely. And then the interest rate say is about 5.37. These days you probably can get better interest rates. And say you are overpaying your mortgage by additional £1,000 each month. So your debt is about 450,000. You are making additional payment on top of your regular payment of about £1,000 each month. Let's click on calculate. So if that is what you are doing by overpaying additional £1,000 each month, you would have saved £209,000 in interest only. 290 pounds, 209,090 pounds in interest only. So this interest that should have gone to the lender, this is what you would have saved. Now, your debt will be cleared out in 12 years, 7 months. Your debt will be cleared out in 12 years, 7 months by overpaying by £1,000 only. Meaning you will only have almost 13 years to pay off your mortgage. So instead of paying it off for 28 years, you would have successfully paid it off in 13 years. And guess what? If you even increase that £1,000 more, you might even pay it off in 10 years. But before I show you that, and also you can see what will be the total payment you would you will make. You will make 661,000. Now, another thing that is important to also show you is now without the overpayment, look at what you are paying. Or look at the differences in your debts as they progress. So if you didn't make any overpayment from 0 to 28 years, this is how your debt decreases. Now, but with the overpayment, you're now making an additional £1,000 each month. Now, your debt, look at the difference. It's going from 450K to 430K to 410K. Before you know it, by in 15 years, you've cleared your debt. But without the overpayment, look at the decrease in your debt. Your debt has only gone from 450K to 442K in 1 year. So that's a difference of just 8K. But meanwhile, if you are paying an extra £1,000, in your first year, your debt went from 450K to 430K. See the difference. See the difference. See the difference. An additional £1,000 makes to how your debt is being reduced. So what this is telling you is that these first few years are critical, because if you look at when you are not making any overpayments, look at what's happening. You're going from 450 to 4, so there's barely any difference. You're not making any difference. Basically, eh, what this is saying is that all you are basically doing in these first few years is just simply paying for interest. You are actually not depreciating your mortgage. So it's just going for 450K to 4. So you are actually, all your money you are paying is not going towards your repayment, it's going towards interest payment. So basically, you need to start overpaying early. That is when you get the benefit of overpayment. If you don't pay it early, what happens? It means by the 10th year, if you haven't started overpaying, you still have 400, almost 358K debt left. Whereas if you have been overpaying in that 10th year, all you have left is 200K to settle. So you see that it's not just overpay, but overpay early, because the bulk of your interest is actually collected earlier in the very few years. So you see, the lenders are very smart. So before you wake up, you've already paid so much and so much to the lenders in interest payments. By the time you are awake, it's almost too late. You are really not making any impact on depreciating your mortgage, on reducing your mortgage. So it is very critical. This is why it is so important. So let me do an example. Say I decide to overpay more than £1,000. So I make it 1.5. Let's see what that difference makes. So I make more. If I do that, I'm now saving 249,000 that should have gone to the lenders. I'm saving that. I don't need to give them any more. And then you clear your that even 15 years earlier than normal. And then so all you have to pay is to pay in 12 years. So the previous one, you have to make payment in about 15 years. But now you have to make payments in just about 12 years. In 12 years, you have cleared your debt because you've saved 12 to 13 years, because you've saved almost 15 and 4 years earlier. So I haven't shown you that. Let me stop sharing that screen. So I've shown you why it is important to overpay, but not just overpay earlier. That because the interest is actually collected in the early phase of that mortgage. But before overpaying, something you have to realize or check with the lender is the condition of your mortgage. Sometimes they might tell you the maximum you can overpay is 3 times. You can only pay in 3 times of your monthly repayment. Say your monthly repayment is 500. The most you can pay back to the lender is 3 times 500, which is 1,500 each month. So that can be a condition. Sometimes the condition can be you can only pay 10% of your debt. Hi guys, thank you for watching this video. Now, if you like this video, please subscribe to this channel and also like the video. Now, when you subscribe, it will help you receive notification when I release more videos. My plan is to release more of such appealing and interesting videos. Now, if and that way, these videos will be able to reach more people that need this information. Thank you for watching. Annually. So once you know, say you are paying 500 every month, in 1 year, that's about 500 times 12, 60, about £6,000. So you are paying about £6,000 every year, and then you need to then um sorry, you need to work out what is 10% of the total value of your home, and then of the mortgage, and then divide that by 12, and then you work out how much you can pay each month. That's another way they place a condition on your mortgage. So, but either way, the most important thing is to make overpayments, no matter how small, no matter how big. But like I showed you, it makes a whole lot of difference to your for you to help you paying off your home or your mortgage quicker. So another important factor is to fix your mortgages when you get the opportunity to. So, because by fixing your mortgage, you then know how much is leaving your account every month. So by fixing, you know precisely how much you are paying, then you can then work out, oh, how much extra can I pay? Can I make as overpayment? And whenever you get the opportunity to fix your mortgage on a very low interest rate, that is the time to also fix for a very long time. Now, it is also important to shop around. You just don't take any mortgage rates that have been given to you by your lender or by the mortgage brokers. You need to actually shop around. You can get help from brokers, or you could shop around yourself. What what are the best interest rates out that are out there? If you manage to find very good interest rates, that's the time to consider fixing your mortgage rates for a long time. And fixing it for a long time gives you the benefits of knowing precisely how much you are paying each month, and then you can plan. You can plan and on how much extra you want to overpay. Now, another thing you can do to help you pay off your mortgage fast is to reduce the term of your mortgage. So, when you are being given a mortgage, you are given the option, depending on your age, for a long-term mortgage, because they see that it reduces the payment you make. So they give you the option to fix for 25 years, 28 years, 30 years, or more, depending on your age. But that's the trick, because that will tie you in for longer periods of time, with the mind that your payments are reduced. But what you really want to do is for them to give you the minimum, not the maximum. The minimum 10 is what you require your lenders to provide you. So always ask, give me the minimum 10. And then they tell you how much repayment you would have to make each month. based on that minimum term. And the minimum term tend to be 25 years at most. So 25 years are mostly what all the lenders will give you as a minimum term. And based on that, they will let you know what is the monthly repayment that are required based on that minimum term. So, just to summarize, overpaying your mortgage will help you pay off your mortgage fast, and but not just paying, but starting the overpayment from day one. So you need to start that early. That is when you are able to depreciate your mortgage payment. If you don't start early, then you are still losing money. You are leaving money on the table. So pay off. So start overpayment and start it from day one. The first few years are critical into making a lot of savings. Fix your mortgage where possible. Shop around for good or the lowest interest rate possible, and request for your mortgage term for the minimum term of your mortgage. So, thank you.